This is my number one hack for buying investment properties.
Okay, right off the bat, I'm not sure if I'm going to like what she has to say because it's probably like a hack for buying investment properties where you're committing mortgage fraud or I don't know, but it's got red flags going all over the place. If this is mortgage fraud, I'm going to be very upset.
Most banks don't want you to use this, but savvy investors know about it and use this all the time.
Okay, strike two. Banks don't want you to know this. What does that mean? Mortgage lenders want to make money. Why don't we want you to know about this? Where are these secret meetings being held where we all gather in a room and they go, hey, we can't have people knowing about this secret loan product. I hesitate to do this, but let's continue.
It's called a DSCR loan, and it requires no employment or income verification. So you're not going to have to submit tax returns, none of that. DSCR stands for Debt Service Coverage Ratio. Simply put, if the rent you collect each month covers the mortgage payment and leaves you a little bit extra, the home qualifies. It's the easiest way to buy rental properties without all the paperwork or having to stress out over your debt to income ratio.
Wow, that is easy. What a hack. Where to start? First off, this is not some super secret loan program, and I'm not sure how you can necessarily say that this is the program that all the savvy investors are using. If it was so easy, why aren't all investors doing it? Because if you could just buy a house without verifying income or employment, everyone would be doing it. Surely there's not some sort of catch, is there? Of course there is, but heaven forbid we explain things fully on the internet. DSCR loans aren't some magic loan program. First, let's go over what is true. You can buy investment properties with it. You don't have to verify income or employment on those loans. If the property cash flows, you meet all of the other guidelines, then yes, you do qualify. But what's not being mentioned here is that, shocker, the interest rate is higher. Oh, and you better have a down payment, which is just as much, if not more, than a regular conventional mortgage. Who would have guessed that a mortgage with no income, no employment verification wouldn't have worse terms? It doesn't mean that you're savvy if you don't know about it, and we're not trying to keep it from you. It's probably not a good loan program for you. Now, who is a good candidate for this? That might be the self-employed borrower who just, you write off a ton, but in reality, your business bank statements actually do cash flow. So they might not qualify traditionally, but this allows them a path forward that makes sense.